Hello and welcome to Bricks Videos. This is a channel where we answer all your questions related to property buying. Today's video is on the calculations involving income from house property. Rental income from house property is taxed accordingly. So the rent received with respect to a property that is let out is taxable under the head income from house property. Suppose if the property is sublet after you take it on rent from someone else, then the rent you receive would be taxable under the head income from other sources. But there are certain deductions that need to be made while computing tax on income from house property. Firstly, the annual value of the property let out needs to be calculated. Follow the steps to calculate annual rental value of the property. There are mainly 4 components to calculate annual rental value of the property. Fair rental value or notional rent is the rent that you are assumed to have earned under the income tax even if you don't actually earn any rent on a property. The second component is the market rental value of the property. The third being standard rental value decided by the local municipality. Ultimately, the actual rent that is received by the owner is the fourth component. Further, out of the 4, the highest of the first 2, that is notional rent and market value, needs to be considered firstly. Then the lowest of that and the next value, that is the market value, needs to be considered. Finally, the highest of the previously considered value and standard rent value needs to be considered while calculating annual rental value. After knowing the annual rental value, the unrealized rent, which simply means the rent missed for any month, needs to be deducted to end at gross annual value. Further, after deducting municipal taxes, the net annual rental value is computed. Then a standard deduction of 30% is a must, accounting for the expenses like repairs, renovations, etc. must be deducted. Further, any interest paid on the funds borrowed for house expenditure like repairs, etc. must be deducted. Finally, pre-construction period interest, which is available as deduction in 5 installments from year subsequent to construction completion year, needs to be deducted to compute final net income from house property. Please note the municipal taxes paid shall be deducted only if the same is paid by the owner. This brings us to the end of this video. We hope we have answered your queries relating to this video. If you have any questions, please leave them in the comment section below and we respond to every comment we receive.